Hi there, good afternoon, and you've tuned into ET now. This is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And one thing very key to note is the fact that as we move towards the closing hours of the trading session, markets are holding on to the positive territory or the recovery that they had actually registered towards the initial uptick in initial hours of the trading session. So if you look at Nifty, it's trying to hold above the 18,250 mark. Remember, intraday basis, it did surpass that 18,300 as well. Talking about what are the sectoral indices doing currently in today's trading session, we have the Nifty Metal Index that was the top sectoral gainer earlier in the day, now building on to gains 2.5% uptick coming in for the metal index. IT index seeing a sharp uptick of about 1.5%. Pharma index also actually seeing good uptrend in today's trading session. Is the Adani group of counters which are shining bright in today's trading session. Adani Enterprises, the top gainer on the Nifty with the gains of about 18% or so. Adani Ports also seeing good uptick of about 6.5%. Adani Wilmar, Transmission, Power, all of them seeing good strength. Add to the list as well as Ambuja and ACC. So all of them are seeing good gains in today's trading session. So for now, Vinny, at least if you look at the start of the week, looks like a good positive start.
Positive start, Cheryl, but will this last? Because surely we are going to see a bit of an expiry coming in there at the end of this week as well. So that is one factor that one should keep an eye out on. But on that note, let's get started with all the stocks that are in focus today. Buzzing in trade either on the back of news flows or on the back of technicals. On the technicals, today we're joined by Osho Krishna from Angel One. While from the research team, today we have Ankita joining in with us as well as Harsh as well, who will be joining us shortly. But I'm going to start with the first stock as always, which is in focus. And let's not forget Zomato. They reported their numbers on Friday post market hours. What we saw coming in is that the growth, when you look at the revenue growth of the company, that seemed a bit muted. But other than that, when you look at the operating performance or the profitability of the company, that was a bit better than what the street was expecting. When you look at the losses, they've seen a considerable narrowing on a quarter-on-quarter basis. 187 crores is what the losses came in at versus 346 crores last quarter. Even the operating performance, that the EBITDA loss, which we're looking at, 225 crores this quarter versus 366 crores, which is in the last quarter. Commentary that came in from the management, what they're highlighting is that the business, excluding quick commerce, is adjusted EBITDA positive in Q4 FY23. They're aiming to get positive adjusted EBITDA and PAT on a consolidated basis within the next 4 quarters as well. And obviously, food delivery business, that did well as well. When you look at it on a quarter-on-quarter basis, this quarter adjusted EBITDA for food delivery came in at 78 crores. Hyperpure, Blinkit, that too has continued to see a strong growth as well. So yes, it was a decent number. Morgan Stanley too is maintaining a positive rating on this one. But on that note, let's also listen into what the management had to say on their growth outlook going forward.
We've also mentioned in the letter that delivery cost has not changed much despite a lot of work we've done in the past because of various reasons. But going forward, we do expect that to change. So we're hoping that delivery cost reduction in delivery cost will be more than what we've seen in the last year. And likewise, I think revenue should continue to increase. And we also expect our other variable cost to continue to come down as the efficiency in the business goes up in general. And also because of a little bit of operating leverage that we have in some of these things.
All right, that's a matter for you right now, holding on to gains about 2.5% or so. Let's talk about Wealthspan Enterprises, and this one also came out with stellar set of numbers. The stock at one point in time was trading higher by about 4%. If you look at the earnings coming in for the counter, it reported a profit, consolidated profit that more than doubled, and the revenue from operations saw a jump of about 78%. If you look at the core profit also, it was trading higher by about 26%. Rather, it registered a core profit of uptick of about 26%. No doubt the stock right now, it's given up all of those morning gains, trading low by approximately percent or so. But we spoke to Sandeep Garg, who's the MD of Wealthspan Enterprises, and he expects the revenue run rate to increase going ahead, leading to margin expansion in the future. What else he shared with us? Listen in.
Annualized basis, we do believe that we have been doing about 11% or so, and we expect as the our revenue run rate will increase in the FY24, the margins to not only keep that tracking, but also improve up from there. Overall, all our projects that we have are now operational. So this is the uptick that you see in the revenues because of those reasons.
Okay, those were the earnings candidate, but let's pull up the charts for AIA Engineering. And Osho, what are they looking like currently? Today, when you look at AIA Engineering, this one is buzzing in trade. Last 6 months, it's managed to see decent gains as well. Not very sharp up move, but yes, decent gains. What is it indicating now for AIA Engineering?
Yes, good afternoon, everyone. Well, AIA Engineering has gained some kind of traction from the last week. If we will be talking about last Thursday, then there has been a decent breakout in AIA Engineering around the levels of 28.20, 28.40. And even on the consecutive day, Friday, we have seen the retesting of the breakout zone, which was approximately around the same levels. But if we will be talking about the overall technical setup, then we can see a kind of double bottom formation in AIA Engineering. And from here onwards, as on the technical chart and as the formation has been made, we can expect the 52 weeks high of 29.60 to get tested in a very short term perspective. So one should definitely keep a radar on AIA Engineering for immediate target of 29.60. And on the downside, we are having a very strong demand zone around 2800 to 28.20. So one should definitely try to accumulate this counter for short term perspective.
All right, moving on, Ankita, CG Consumer, why is this one in focus today?
Well, Cheryl, on the back of the results, Q4 numbers came out for CG Consumer Electricals. And if you look at the numbers, it reported a decline of 25% in its consolidated net profit at 131 crores on a year-on-year basis. Its revenue from operations, however, increased to 15% on a year-on-year basis. And the MD and CEO of CG Consumers, Pramit Ghosh, was pretty positive in his commentary. He said that they had delivered well in Q4 with calibrated approach towards the BEE transition, the rollout of new brand architecture for pumps, portfolio strengthening in appliances, and focus on premiumization across board. And on the back of that, the stock is up a good 2% in trade, Cheryl.
All right, so that is CG Consumer for you. Let's talk about Som Distilleries. The flashes on the bottom of the screen. The company has entered into strategic tie with Carlsberg India. And post this particular development, you can see the stock price. It is now near its day's high as 0.4.5% uptick coming in for Som Distilleries on back of that particular news. There you go. Look at the spike in that particular counter. What else is the company saying in their release is the fact that they have announced a strategic tie with Carlsberg. Also, the partnership aims to leverage collective strengths, expertise, resources of both the organizations to enhance the production and distribution of premium beverages in Odisha region. So that's the development coming in on Som Distilleries. The stock trading higher by about 4.7% or rather 5% as we speak right now.
Absolutely, and surely the weekend continues for Som Distilleries, Cheryl. Maybe not for you and me, but here the weekend is continuing for Som Distilleries. Harsh, let's move on and talk about Bandhan Bank then. Take your 1 minute to tell us what the numbers are looking like.
Well, thanks for that, Vinny. So what we're looking at in terms of Bandhan Bank is NII has not exactly expanded, but that's on the back of the fact that we have seen a higher base for Bandhan Bank same time last year. So in fact, it's down 3% year on year, 19% up quarter on quarter though, on the back of better recoveries. Operating profit, going down 29% year on year, largely the elevated OPEX hitting operating profit at the moment. Provisions are down when I'm looking at it sequentially, so that's definitely a plus. And profitability is down on a higher base last year, so profitability is around 58% lower at 808 crore. But in terms of loan growth is back for the bank, a solid 12% uptick on a sequential basis, 6% uptick in terms of deposits. So on both sides of the balance sheet, the growth is strong. When I'm also looking at largely what the commentary is suggesting, a good commentary, they're expecting NIMs in the 7 to 7.5% range, quite healthy. Credit costs are expected to trend lower. Credit growth is expected to be 20% and deposit growth higher than that. They're also looking at customers coming back and recoveries coming through. ROAs are expected to be at around 2.8% for FY24 and more than 3% beyond that. So on the back of that, you can see the stock was buzzing or is buzzing.
All right, that is Bandhan Bank for you. But on that note, we slip into a break in this edition of Market Fatafat. We'll quickly go slip into a break and come back with more stocks after the break.
Let's move on to the next one, and Cochin Shipyard. This stock is in focus on the back of its numbers. When you look at it, the stock has seen a clear fall coming in as well. Down 10% as of now, day's lowest point. And what is coming in, we have a note from Antique as well. They're retaining their hold rating, given a target price of 504 rupees per share. They said that Cochin Shipyard is grappling with the post-IAC 1 execution-related challenges. Having said that, they also believe that 9,800 crores of NGMV orders move is to the execution. That could maybe work out well, but this will give a much needed respite in FY24 estimates is what they're highlighting. So this quarter, maybe that impact is what we're seeing coming in over there. Also, the CMD of Cochin Shipyard did say that the shipbuilding companies cannot be analyzed quarterly on a basis of the trends. More specifically, the indication was towards the changes in the order composition as the critical projects come to an end. Now, in the case of Cochin Shipyard, also the company won NGMV orders only in the month of April 23. So yes, that effect will be we'll start seeing that in FY24. So that is why, as of now, Antique is retaining a hold. Nothing exciting happening for the stock in terms of numbers as well. 504 is what the target price is at.
All right, that is Cochin for you, Shipyard for you. Osho, Kei Industries, how is this one looking on the charts to you? Do you think it's reached an attractive level that one can look at, or still hold on to in case if you're looking to buy this one?
See, basically on the last trading session, that is on Friday, we have seen a very decent and a very strong setup of trading volumes in this counter. And it has totally reversed from the lows of approximately 1920s from the lower zone. From there onwards, we have seen a very strong rally in this counter. Today's session can be seen some kind of a cool off or profit booking in this counter, but any dip towards 1980, 1990 is to be considered healthy, and one should definitely accumulate this counter. Overall technical setup for this is very, very strong. The stock has been in the secular up run, and from here onwards, one can expect the immediate target of 2100, and even surpassing 2100, another 200 point of rally can be seen in KEI in a near period time frame.
All right, moving on, let's talk about DVS Laboratories, and looks like the times are changing for this one because the stock today saw an uptick of approximately 3%, giving it the biggest percentage gain since May 9th. Right now, as you can see, the stock has moved past those levels, trading higher by about 4.6%. You have Jefferies that has upgraded DVS to a buy rating from an underperform rating, gone ahead and raised the target price to 3,610 rupees per share from 2,550 rupees per share. They're saying that the Q4 revenue to EBITDA declined by about 23% and 56% on a year-on-year basis, but it was much better than the street estimates. They also said the company should be back to achieving mid to high teens revenue growth from Q2 of FY24, with the EBITDA growing at a faster pace due to leverage benefits and softening input costs. Besides that, the brokerage has gone ahead and raised the FY24-25 EPS estimates by 4 to 13%. And not just Jefferies, you have Motilal also that has raised the earnings estimates for DVS Laboratories for FY24-25 by 7% and 6% respectively. So it looks like hopefully the tide is turning in favor of the company, that's DVS Laboratories. The brokerage is giving a thumbs up for it, or rather upgrading their call on this particular counter, and you can see the stock trading higher by 4.6% as we speak.
Okay, let's move on and talk about NIIT on the charts. And Osho, this one has seen a 9% up move just in the last 5 trading sessions. Still at 397, an attractive buy?
See, obviously the counter has seen a very decent rally, specifically in last 2 trading sessions from the levels of the breakout zone, which was approximately around 380. The stock has today tested the levels of 400. But if we will be looking at the technical setup, it has given a channel breakout. So from here onwards, one can expect a target of nearly 35 to 40 points from the levels of breakout. So as the levels were 380, 382 as on the breakout zone. So from here onwards, one can expect the immediate upside target of near to 420, 425 in short run. But obviously the stock has gained a strong momentum in past 2 days. So any dip towards 390, 385 should be considered healthy, and one should definitely try to accumulate around these levels for the target of 420, 425 in short term period.
All right, moving on, Ankita, Godavari Power, why this one is in the spotlight today?
Well, Cheryl, it is on the back of quarter four results. The stock is down now almost 4% in trade today because of the results. The results weren't that great. The net sales were down more than 5.5% on a year-on-year basis. Even the net profit was down as much as 46% on a year-on-year basis to 191 crores from 359 crores last year. The EBITDA stands at 299 crores, down 21% on a year-on-year basis. And if you look at the EPS also, that has also decreased to 14 rupees in March from 26 rupees in March as of last year. And that's the reason why we are seeing the stock getting battered in trade today.
Okay, let's move on and talk about Ambuja Cements then on the charts. And obviously, Osho, we're seeing those Adani names in focus today. Ambuja Cements, would that be a top pick coming in the cement space?
There have been a lot of changes, a lot of developments that we have seen on the back of Adani Group moving upwards. But on the basis of technical chart, what we have seen that Ambuja Cement has seen a consolidation breakout. So the levels from 420 and 418 was considered to be a very strong supply zone for this counter. But on today's trading session, we have seen a decent volume up move in Ambuja Cement. So we are expecting that the consolidation zone has been shifted upwards from here onwards. So on the downside, 418 should be acting as a strong support now. And on the higher end, the 200-day SMA, which is placed approximately around 455 levels, should be considered as the immediate resistance for this counter. So the counter can be moving in the broad range of 30-35 points in the coming period. On the downside, 418, on the higher end, 445.
All right, that is Ambuja Cements for you. And remember, all of the Adani Group counters seeing a sharp up move in today's trading session, with Adani Enterprises seeing an uptick of approximately 18% as we speak. Harsh, but let's talk about Bharat Electronics, and why is this in focus?
Well, on the back of results, Cheryl, so what we're seeing is a good set of numbers. Revenue is up around 2.5% on a year-on-year basis. It's coming at 6,479 crore. You're looking at EBITDA, which has gone up by 16% on a year-on-year basis. So we've seen that margin expansion starting to play out. We're seeing EBITDA at 1832 crore versus the 1578 crore number same time last year. We're seeing margins therefore go up by around 3.4% on a year-on-year basis. Good uptick from that 25% mark to the 28.5%, almost 28.5% mark. And profit also seeing a solid 20% expansion on a year-on-year basis. The order book also looks solid. Now, mind you, on a 17,500 crore revenue number for FY23, the order book looks pretty strong. 60,000 crore order book now, and the 20,000 crore order book one through the year also rose 6% on a year-on-year basis. So across that piece, of course, it's a positive. The EBITDA expanded largely on the back of lower commodity costs. That was really aiding the EBITDA as well. So raw material as well as commodity aiding EBITDA, as well as a good order backlog. Solid numbers from the company.
Solid numbers from the company. That's all on the fundamental side, and that's the stock reason that we're seeing a move in the stock as well. But Osho, the charts, are they indicating a solid up move then here as well?
After the result, there has been quite a decent up move. It's not a very strong up move, but 2.53% is a very decent up move in this counter. But looking at the overall trajectory, the up move has started from the levels of 90 zone. So from here onwards, one can expect the movement to continue, but on the higher end, 112 and 114 is a very strong resistance zone for this counter. So people should keep these levels in their radar, and once it surpasses 114, then from there onwards, one can expect a strong rally in this counter, because it has already entered in an overbought region, and it is nearing to the 52-week high of 113, 114 zone. So one should definitely try to look for accumulating this counter above 113, 14 levels. Even on the downside, if there will be any kind of corrections also, then 106 is a very strong support zone for this counter. So one should definitely try to accumulate near 106, and on the higher end, 114 will be the immediate target. But once it breaches those levels, then from there onwards, we can expect the rally to continue towards 124 in immediate basis.
Okay. That is BEL for you all. But let's just mark the flashes that are coming in on your screen. East Pipes Integrated Company for Industry has signed a contract with Saudi Aramco. That's for WellSpan Corp. And now what they're saying is also in terms of, obviously this is large diameter steel pipes. This is the supply for that they will be contract with Saudi Aramco. We have seen a sharp uptick coming in the stock as well. Financial impact of the contract will be reflected from the second half of this year as well as the first half of FY25 as well. So yes, Q3, Q4 FY24 as well as Q1 FY25. Deal value is around 4,000 crores inclusive of the value added tax. On the back of this, we've seen a sharp up move coming in the stock as of now, up more than 2% in trade. On that note, let's just slip into a very short break, viewers. Don't go anywhere. We'll be back with more stocks after this break.